Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. We're having our Friday together.
Bob, we start off our show with listener questions usually, and we have a couple from Mike and also from Chris in Rhode Island. Well, we'll start off with Mike. Mike says, hello, Jim and Bob. I have two questions for Bob. Bob, is the current market momentum being driven by 1, Fed liquidity, 2, fear of missing out, 3, Tina, there is no alternative, 4, call options, 5, COVID vaccine news, or 6, just old-fashioned irrational exuberance?
That's a good part of it, yeah. Those are all valid points, Mike. I like your line, Tina, there is no alternative. We went through the fall, which is a time, if there were liquidity problems to be discovered, they would have been discovered, but there was every week there was something that the street took as positive. And you get markets like that, and also, I guess it was in the middle of October we mentioned our yield curve and credit spreads work was had gone to kind of neutral rather than through the summer it was threatening. So, but we have what we have, and the it's at times the exuberance has been measurable and therefore irrational. But I just would wrap it up, Mike, saying that the stock market was in the mood to be positive about anything that came out, and this is what's them. You've had a modest correction, base metals, you've had a correction in crude, but nothing sensational, and we're now, being November, we're in the period where stock markets could be positive for a few months, so we'll just take it as that. But then you had another part of the question.
He also asks, Bitcoin is on a parabolic rise and is nearing its December 2017 top. After Bitcoin hit that all-time high in December 2017, the equity market sold off sharply just a month later in January. Bob, assuming that Bitcoin double tops in the next couple of weeks and reverses lower from there, could this be a signal that the equity markets may top out once again a month later?
Yeah, good point, Mike. Actually, that rush in the Bitcoin phenomenon was amazing. And I think it was December 17th, 2017, when we got the sequential sell. I think it was the second one. One earlier had been a year and a half earlier. So anyways, we got this sell. And it was also at the time of year when big speculative moves can often end in the around January of the year, and so that's what happened. And yes, the technicals were good. My colleague Ross got the buy on Bitcoin well earlier in the year, and it has been, let's use the word, fabulous, and at the previous highs, and getting overbought. So it's vulnerable. I think there's probably been tremendous advances in the whole Bitcoin concept. But hey, it's still an item on an exchange to be bid up and at some time to be bid down. So we'll watch for it. Mike, thanks for the questions.
We have a question from Chris in Rhode Island. Jim, please ask Bob if he can comment on the Great Reset and if it has any historic parallels in financial history. It seems to me that such craven political ambitions would require perpetual coercion, and in today's highly connected world would have a half-life of only about one election cycle. Thank you, says Chris of Rhode Island.
Yeah, that's really a pertinent question, because I just wrote down one of the headlines that John Kerry, who has been in the political game forever, he says, John Kerry says, Great Reset is needed to stop the rise of populism. So, Chris, your question and the statement by John Kerry is right to the point. And this is where, ages ago, I did a lot of historical research, and you came up with the concept of great experiments in authoritarian government. And the pushing around of the huge bureaucracy becomes evident. In Roman times, you don't have a reliable price index, but you do have a list of virtually every debasement of the currency. So the 200s, right into early 300s, was one of those centuries where the bureaucracy goes crazy, taxes everything in sight, and inflates like mad. And then it sort of burned out, destroyed the economy. The ordinary citizens had had enough. And actually, there's a couple of dates. I think 310 is when the Emperor Constantine, who was a good emperor, then began to reintroduce the gold currency, the gold coinage. Now, what that was is a signal that the resort to inflation was over, and that the funding for the intrusive bureaucracy was also over. And then there was a second handle of that in 313, when Constantine moved to recognize Christianity. Hitherto, the Roman Empire had a list of approved cults and religions. There was only one that was prevented, and that was Christianity. So then that marked the change from a brutal state to favoring the family. So this seems to be happening here. Now, and the question is that perpetual coercion, that's a great line. The next great experiment in authoritarian government started about 1500 when gold and silver bullion, particularly silver bullion, began to arrive from the New World, and it really put a lot of coinage around and reflated things. But also the Spanish crown was the power at the time, and the greatest bullion windfall in history wasn't enough. They were so ambitious that they had to borrow money, and then they defaulted about 3 or 4 times. So it was another one of those, and the consumer price index is reasonably reliable for that period, and the 1500s recorded an extraordinary rise, and the bureaucrats corrupted the only organization existing at the time, which was the Catholic Church, until it all became venal and corrupt and disgusting, and it became too much. So it was in your face and in your wallet government, and the public threw it off eventually. It took a long time, and it's best followed in England, where there were a few events that marked the transition. And the key one was in England what they call the Glorious Revolution, 1688. And the King James was the last absolutist king, and his word was law. He was trying to impose his will, and the public was starting to go against him, but he threatened to bring Catholic troops from France to subdue the Brits. I mean, that just doesn't work. So essentially, out of the financial center, London, with their merchants and traders and whatnot, essentially led this popular uprising And they, of course, in those days had to have a king, so they got William of Orange from Holland. And it turned out to be a bloodless reformation where the king saw that the tide of opinion was going against him from London right down to ordinary peasants on farms or in villages or wherever. It was a popular uprising in it, and James wisely saw the tide against him and moved to France seeking solace in still authoritarian France. So we are in the equivalent. This one's, if you knew about both of the previous great experiments in authoritarian government in 1900, you couldn't forecast that there would be another horror show century where governments go berserk. And, of course, the ultimate perk that authoritarian governments grant themselves has been the privilege of state murder. And you can look at today's Democrats and their locked-in media, and you know that their ambition will never end. There will always be something tomorrow to use to intrude in your life and in order to justify taking your money, taxes. So, and also, this may seem kind of wild, but I'm just going to repeat that the two great experiments in authoritarian government as they occurred in Europe, when Europe was the senior economy, the governing classes eventually granted themselves the privilege of state murder. So this is where the resolution to this U.S. election is critical. And in my reading of it, it looks like there is enough to decide that in key swing states, the election process had been totally corrupted, and I think that Trump will end up being the duly elected next president, in which case then cleaning out the swamp critters will really take a fabulous step. But as I say, if you want to read back, there's great stories in European history on this, and the best one, and there's a very good Wikipedia on it, is just simply The Glorious Revolution of 1688. Our listeners should look it up. It's a good read. So there we've got two great questions.
We'll have more with Bob Hoye when we return.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Bob Hoye. Bob, one of the headlines you noted, world stocks head for record high. What's the story there?
Well, there's a great demand for stock certificates, and at the same time, there's a whole lot of new issues, or as they're called now, IPOs, which is providing a terrific supply of stock certificates, and somewhere that bid will be satisfied. So it's hard to put that on. Often good, really good moves in stock market can conclude in the January window. We've played that one for decades. And if you take a look, and as I'm projecting, probably the election will go to Trump. After all, he did win it on the constitutionally determined election day. So that would be a plus for the markets. And then what story you got after that? A tremendous struggle by the administration to try and reform the venality and crookedness of Department of Justice, FBI, the income tax people. Of course, the corruption of the Federal Reserve is not new. That corruption began the day it was formed and opened its doors for business in January 1914. So I'm the optimist in viewing the tremendous political struggle that's going on now. I think it's ending action on the experiment in authoritarian government that began at around 1900. At that time, a liberal was a proud concept of maximum liberty for the individual and limited government. And now, liberals are swanning around on the prestige and of that former name connotation, but they're all a bunch of Marxists. And how they became Marxist, they haven't got a clue on it. But you've had the term liberal change from meaning freedom to meaning authoritarian government, and they've always got an excuse. Weather, climate warming, my gosh, all this stuff. And then, of course, the hysteria about yet another contagious respiratory disease. They've played that one to the limit. So this, and then rigging the election so blatantly is remarkable. But, Jim, I think it's ending action. So the next into the new year is going to be very interesting.
We'll have more with Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, America's zombie companies have racked up $1.4 trillion in debt. Is that something people should be worried about?
Yeah, but there's no timing on this one. It's just an example whereby these Netflix and Amazon and whatnot, they're huge companies, but many of them are run on debt and are not making enough money to really be viable prospects at all. So I'm no longer a balance sheet analyst, but it is crazy out there, but these markets can stay crazy for a long time, and hopefully our measures, technical work, we're able usually to identify an overbought or an oversold, because you do have selling opportunities and buying opportunities, and we're on top of that. But at the moment, you can't say which, exactly whether it's oversold or overbought, but on the next, I think it'll rally into January and become overbought enough to say, let's lighten up, and we'll be watching for that.
Talk about a company that has two different faces, Tesla. Nobody's racked in more money in the stock market than they have. They're now one of the world's most valuable car companies. If you look at their stock, yet they have yet to make a penny from a sale. Every car they sell right now, they lose $15,000, $20,000.
So pardon me for laughing, but Jim, you picked a good one. Yeah, that's it. Musk is one of the greatest stock promoters in history. Absolutely unbelievable. But he has a very wide following with huge pockets, and they're able to keep the stock alive. But on the next bear market, and bear markets are inevitable, it could be severe enough that even something like Tesla is going to get damaged pretty hard. You've seen the darling stock before. Actually, it was a good operating company in the 1929 bubble, was Radio Corp of America, RCA, and they had selling radios, selling gramophones. They were into movies. My God, it was fabulous. And the stock ran up to $114 in 1929, and I think the projection was for $3 a share earnings, and that was based on, I'll repeat them, gramophones, radio sales, network radio programs they were selling, all of this stuff, and that's what the analysts were forecasting was $3 a share earnings. The stock crashed, I think, to about $1.50, and then the company gradually became profitable, and earnings came in, and they didn't earn $3 a share until 1957, and that was based upon the Elvis Presley contract. And, of course, in 1929, the analysts had their $3 a share earnings, but on the old stuff, not on Elvis Presley. That was impossible. So this is where financial history can provide some instruction, and I love to relate it.
Bob, America's household debt has now hit a record high. Is that a concern?
That's another one. But again, it doesn't give you timing. It's just that everybody has resorted to debt. But then also I saw one about people were doing more and more transactions in cash, and of course the governments are against that. But the interventionist economists have this idea that if they push credit into the economy, that will force a business expansion. But this is a confusing cause and correlation. Yes, you do get a credit expanding with a business expansion, but one doesn't cause the other. They're together. It's like the old one about when the roosters crow in the morning, that it caused the sun to rise. And as I said, one way of calling this is that getting confused between causation and correlation. But in formal logic, they actually got a term for it. It's called a primitive syllogism. So here you are with the Federal Reserve, the most powerful, important central bank in the world, and it's being run on absolute illogic. And, of course, it doesn't work. So let's just give another little hit to the Fed, where in the early 1900s, when they were talking about forming a central bank, most policymakers then knew that when you had a financial crisis, it would be followed by a recession. So then part of the tout behind the Fed was that as a uniquely gifted lender of last resort, it would be there to prevent the financial crises that preceded recessions. So the thinking is that the Fed would prevent recessions. Now, I came into the business in 1963, and in 1964 I was in Wood Gundy's research department as a trainee, mining analyst, oil analyst, that sort of thing. And at that time, now in Toronto office, it was 1965, there was some macroeconomist came and he pointed out that now with computers, and you had mainframe computers, and Paul Samuelson was then the big name in macroeconomics. And now when you had a computer to do your forecasting, there now would never be another recession. So since the first boast in 1913 that the Fed would prevent recessions, this is now number 19. So clearly, this hypothesis does not work. But then how do you take the power or prestige away from the Federal Reserve? Only, not through the economic side, but it's only through public opinion, where as part of the big reform that's going on, I think the public's going to take a look on, let's say, as this recession extends and gets a little worse, then the public's going to look at the trillions of dollars spent by the Fed in order to prevent bad things from happening. And when you're in the middle of bad things, the public can look at the Fed and say, hey, you guys, your promises just don't work. So then there will be constraints put on the Fed, and the best constraint, of course, is gold standard. So I think that will happen at some time. Don't know when, but it'll happen. So, Jim, we do live in very interesting times.
U.S. investors are driving borrowers to U.S. debt. What's that story?
That's the same old thing. Your central bankers are all practicing the same theory, and they think that driving interest rates down drives the economy up, and which doesn't work. So this is what they have now. And, of course, over a long period of time, all of this manipulation really does depreciate the currency, and it's only got about 3% of the purchasing power it had in 1913. So the public has learned to play this depreciation game, and the best way to play it is to have debt, and you borrow dollars, and say 20 years later you pay them back with 50-cent pieces. Hey, it's a natural game. But once everybody gets on one side of the ship, it has a tendency to tilt. So, and everybody is on the one side of the ship, which is to be borrowed up, leveraged up, loans and everything else, and it shows up in a number of series. It's crazy, but they can stay crazy for a while yet. Hopefully our technical work will catch the next change.
Bob, isn't this drive to ultra-low interest rates, even negative interest rates, so damaging to things like pension funds, bank profits, and insurance companies that have to up their premiums and so they're able to pay off claims?
Yeah, well, that gets us around to one of the headlines, because then they got to reach for yield. So institutions are buying junk when they shouldn't be buying junk, because they have to get the yield in order to meet actuarial requirements. It is totally insane. And the only reason why the rates are so low is because the central bankers won't quit the game. But eventually it backs up. But, one of the things that I did a long time ago in order to really get a handle on interest rates is you take the rate of interest like 6% and adjust it for the rate of inflation like 3%, and then you get the real rate of inflation at 3%. So I did that at the key bubbles ever since 1700 with the South Sea bubble, and there's a pattern there that for the long-dated security, senior security, the equivalent of long treasuries, the real rate goes down in a boom, because people are bidding up bonds like crazy at the same time as you have a business expansion, so that puts the rate of inflation up. And on 3 of the bubbles, let me think, 1772, 1825, and 1873, real long interest rates in the senior economy went to minus. In some cases, one number I remember, minus 5%. Real adjusted for inflation. And then, once the contraction comes, the action in the bond market can be brutal. And the typical increase in real long rates has been around 10 percentage points. That's huge. But it's happened 5 times in the past on 5 previous great bubbles. And we're now in number 6 great bubble. And real long interest rates have come down. Now, in the last few months, they've turned up a little, enough to be interesting, but not enough to call for a trend change from decline. And then the other one that is really reliable is that gold's real price, same thing, adjusted for inflation. It typically goes down in a bubble, and it really went down from 2011 to 2018 and bottomed in 2018. And gold's real prices advanced terrifically, and with it, profitability for gold miners. And the other thing is that once, with the bear market for gold's real price, gold stocks would underperform the S&P, which they did. And then when you get on the transition to a post-bubble contraction, which may be on, then the real price of gold goes up, and gold stocks outperform the S&P, and the outperformance since earlier in the year is almost a double. So where the S&P's gone up a 20%er in a period, the gold stock's gone up 40% in the equivalent period. So the post-bubble action in gold is already there, so it's leading And my guess is that it's leading the eventual turn-up in real long interest rates, which will be rather interesting and rather severe when it comes. So, Jim, we sure have a lot of fascinating things to watch out there.
Bob, thank you so much for chatting with us.
Yeah, hey, it's good to be with you, and look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He'll also be making a guest appearance on This Week in Money this weekend. If you have any questions for Bob, and he loves to answer them, you can send them to info@HoweStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.